Yeah, quantum bubble continues. You know, the pain on the upside. Yeah, the pain on the upside tends to make you like, how should I put it? Cynical or frustrated or whatever on the downside. You know, when you short these, as you have to be sort of prepared for them to go up. I mean, I don't think anybody was prepared for them to go up this much, but you have to be a little bit prepared for them to go up. And when they go up, you can't get too mad because it's kind of what you wanted. Nobody can say the second I short a stock is the time it'll start going down, because that's just obviously not the way the market works. Otherwise, you'd be, every time we pressed a button, we made profits. That'd be a very cool market. That wouldn't it wouldn't be called trading, it'd be called free money. So when we do trade and a stock's going up a lot and we start shorting it, you know, we're trying to tame this beast, and you shouldn't be surprised if the beast keeps going. The problem is the beast will run out of steam at some point, and you just can't, when it starts to run out of steam, you can't give up. And a lot of people just give up and say, I'm out. And that's maybe the smarter move at the moment. But eventually, when the stock's back down, you might say, I wish I didn't give up trying to fight this beast. Or you might say, I'm glad I gave up trying to fight this beast. It all depends on what happens in the end. And then it also depends on how big your position was in the meantime and all this stuff. So you know, everyone has to learn to manage risk one way or another. Some people have to learn several times. Yeah, there's a difference between being numb and being resilient. I've shorted so many stocks over my career, it's really not. The dot-com bubble was way worse. In dot-coms, you'd have stocks that go from 10 to 100, and they were just as useless and valueless at 10. And at 100, you're just sitting there like, I think a couple things to learn are, one, don't have huge positions. Two, if you can buy cheap hedges, you buy them. I think Rigetti is a great short. Three, try to be long something that'll benefit. Obviously, in this case of quantum, it's like some of the trade has been, some people have put on like, okay, let me long IonQ and short Rigetti, because that's like IonQ is a little more established and Rigetti is less established. But usually that'll work the other way around because people want to speculate on speculation. So quantum is speculative to begin with, and they're like, give me the most speculative quantum. It's like and other people, just give me the IonQ, that's a low dose. So it's it's a really fascinating bubble, but you have to understand that this is like, if you were there for GameStop, that was crazier. The dot-com bubble, that was crazier. You can't prepare for a 10x when you are short, but you have to think that it's possible. And so I'll give you guys an example. And this is kind of what I did a little bit of, which is why I still have a portfolio to even speak of. So if you short, although it's a lot smaller than it was before I met quantum computing. If you short, say, 10,000 shares of Rigetti, and let's say, I don't think Apple's a bubble. Apple's very profitable. A bubble is when there's just an unreasonable, insane valuation, just totally out of control. So let's say you're short Rigetti, let's say you're short right now at 1747. And you want to be concerned that, okay, maybe in some crazy universe this goes to 40 or 50 or 100 or whatever. Well, you could say, let me go long, Jan 20 calls, Jan 3, wow, Jan 3rd. And let's say you could buy 100 for argument's sake, but I'm going to show you some other permutations. I'm going to put it down here. And these are the 20 calls. So let's say you buy these at $2.35. So now basically your new short break even is as if you shorted now at 15. So you have to ask yourself, by next week, will it make sense to short Rigetti at my 15.12 break even? Am I willing to short Rigetti at 15.12? And you might say, yeah, I mean, it's up $2 today for no reason. Even if that reverses, I'm now good to go. But it may not reverse, it could get worse. So why would I lower my break even? That's annoying. I don't want to lower my break even. I want my break even to be as high as possible. Well, the nice thing about this break even is that it protects you from any move above 20. So you've capped your max loss to 22.35. So the most you can lose here, at least in 1 week, is if the stock goes to say 100. Well, you lose $83 on the common stock, and that's times 10,000. So you lose $830,000 in the common. Well, that would mostly put you in bankruptcy, but the calls go up. The 20 calls at 100 are worth 80, and you bought them for $2.35. So you made $78, and that's also times 10K. So you only lost 50K. So the most you can lose in this scenario is $50,000. So you can plan out ahead of time, how much risk do you want? You can know exactly what your max loss is. And you can do this in a partial amount. So you might say, well, I want to be short some. I don't want to lower my break even that bad. So I'm just going to buy 50 calls. Well, that's great. Your break even is a lot smaller, so you would profit even at, say, 16. But on the flip side, this gain would be much less. It'd be something like 39 or something. And you would get smoked on the upside. Now you could do something even crazier, and you could do 150, which is like an overhedge. And this lowers your break even further to, say, a 14 or something. But in the event that the stock goes really hog wild, you actually would make money. You have this weird P&L that looks like this. You kind of lose money down here. You lose money if it stays anywhere near its current price, but you make a fortune if it goes down a lot, and you make a fortune if it goes up a lot. So there's a couple of ways to play this. If you just take unmitigated downside risk, you're basically saying, I want to go naked short, not naked short in the SEC sense, but just short without a hedge. That's fine. But you just have to be prepared that you might be wrong. And look at cassava. Cassava went from, if you guys recall, I think 3 to 100. Then it went down to the 20s when we started shorting it, and it went up to 30 before it went to 2. And in biotech, you have that exact day and time when you will, know what the results will be. Even then, they might try to squeeze you out of the stock. So this business is very tricky, and I feel bad for anybody that, if you just started watching me and you saw the GALT gain, you saw the cassava gain, you said, oh, this is easy, this guy's great, I'm going to short these quantum stocks like he's doing. Well, a couple things. I mean, my portfolio for the public is a YOLO portfolio. I turned it from 100K to 1.1 million, and now I'm down about half from the 1.1 million. So, this is a portfolio for YouTube entertainment. If you have a lot of money and you don't want to lose it, you want to, make careful bets, you don't even have to participate in the quantum short. Or you might say, you know what, I'll short 50 basis points or 1% of my portfolio in the quantum short. But if you also go in, 50% position or 100% position, you're basically saying, I want a YOLO portfolio too. Well, you have to understand the consequences of a YOLO portfolio. So, 80 basis points is something you could survive. You could ride out a double, triple, quadruple before it really starts hurting you. You could ride out a 5x or a 10x before you start to feel pressure. You could even ride out a 50x before you start thinking about margin and liquidation and stuff like that. So, now the flip side is, 80 basis points goes down a bunch. You don't get rich off that. But if you like compounding slowly and carefully, which most people should, then you're doing fine. So, it all depends on how wild you want your portfolio to be. Just make sure you don't blame me. That's what I would ask. You could blame me for the alpha, but don't blame me for the beta. The alpha is right now wrong. It will pay off, I think. But the leverage and the zaniness of the portfolio is up to you. How much you want to trust the bet. And as I've said many, many times, the best traders are right 60% of the time. And I did this analysis of recommendations. I should probably add that here. And again, it's not that I don't feel bad or won't take responsibility. This has been an awful call so far. But if you can take the pain and last, it probably will end up being a great call. And that's still uncertain. I don't know. I mean, quantum could be the next big thing. You know, it could be IonQ could be the next AMD, and Rigetti could be the next NVIDIA. We don't know. Can I say for certain? You know, I can't. Now, would I probably bet my gender? Yes, I would. That it won't be the next AMD, it won't be the next NVIDIA. Yeah, I'd bet my gender on that. But do I bet my gender that the stock can't hit, can't hit 100? You know, it could hit 100. Could Rigetti hit 25 or 30? It could. You know, and you just have to plan to survive that. Now, you might say, look, Martin, I'm a big boy. I don't want to survive at 30 for Rigetti or 80 for IonQ. I think it's over. I think it's the top. Okay. Go crazy. I value my gender quite a bit. I do not want to be Martina, but I'll do it if I have to. No, I think you have to ask yourself, how much risk do I want to sign up for? And if you say, Martin, I am willing to lose it all if IonQ goes to 100. Well, it's an interesting choice, but that's your portfolio, not mine. And maybe for this YOLO portfolio, I am willing to lose it all if IonQ goes to 100. I'm willing to make that bet. That's not going to happen. And I have to decide for me if that makes sense or not. Some people say, you know what, in my portfolio, I'm never going to take a risk where I can lose it all. I just cannot take that risk. I can't afford it. Maybe you're 60 years old and you've saved up $2 million over your whole life. You say, I just can't afford that. You may not want to short at all, period. And that's fine too. You might be 25, you made $1 million a year in FANG. I don't care, I'm a maverick. I'll short it all. I'll go broke if IonQ goes to 40. Well, you're broke then. Because it went from 10 to 20 to 40, and we started shorting it at 25 or 30. And that's a choice you made. You know, you could have shorted 1 basis point of these stocks, right? So it all depends on how you want to look at it. And yeah, some people just like buying puts. And then of course the puts on these types of stocks are very jacked up with vol. Yeah, so there's just a lot to consider here. But again, you know, every time, you know, I try to corner these stocks, they seem to squirm out of my way. So, you know, I've tried many times to catch these stocks, and then what you want to do is you want to sort of pile on your short as they go down. Now they're starting to drop a little bit now, but does that mean it's the end for quantum stocks? I don't know. They could just start rallying a second later. You know, I'm going to try to grab them right now. We'll see. But, you know, every time I've tried, they've squirmed out of the way. Now, if you give up, you're not going to have any alpha when they go down. And a great friend of mine, my oldest business partner and college buddy, who's the best trader I know, he says, Martin, you take the elevator up, but you on your shorts,
𝗠𝗏𝗘𝗏.
then you take the stairs down. He said you should be taking the stairs up and the elevator down. And I thought that was a very
𝗠𝗏𝗘𝗏.
good point. So if you are willing to short a ton as it goes up quickly,
𝗠𝗏𝗘𝗏.
you start covering and
𝗠𝗏𝗘𝗏.
hedging as it goes down slowly, or you don't hedge very, you know, you have to decide to make sure you make profit. So yeah. I mean, these reversals are very potent because the guys that bought Rigetti at 18 this morning, they're pretty upset and they're likely to liquidate. And you know, some of them bought a margin the same way we shorted a margin. So that's part of the, you know, part of the business too. So anyway, this stuff is not easy. I never wanted to have it come across that it's easy or that, you know, shorting is real simple. It is fun. It is very rewarding when you pick a crappy company, you short the stock and it goes down, but it's not so fun when it goes up a lot and then you have to patiently wait, or you over shorted it, which I did in my case here, but I'm living to play another day, or you over short it and you can't live to play another day, which I'm sure somebody out there is just done. And that sucks, you know? You know, that's happened to me. That could have happened to me. If Rigetti went to 100, this portfolio at least would be done. So, and I don't know, it'd be frustrating. But again, you have to pick, okay, is my portfolio at Interactive Brokers the only money I have in my entire life? If the answer is that's the only money you have in your entire life and you're willing to lose it all, well, I hope you're very early on in your career, or you just have such a high risk tolerance personally that, if it makes sense for you, it makes sense for you. But it's not the kind of thing that necessarily should make sense for most people. But yeah, GALT looks like a good short. I got out of that because I usually get out of the binaries. But that looks pretty juicy. Yeah, I mean, especially you want to copy a trader who has a hot hand. You might have missed 𝗬𝗏 and you're, oh man, his next one, I'm going to go all in. It's not the right way to do it. I have a lot of friends that work for like Steve Cohen or Ken Griffin or guys like that. And look, these guys know how to make money. They're good at it. But if you follow their picks, even if you talk to them, you're personally friends with them, you go to their weddings, you see them on weekends, you share Hampton's house, you're very close. They have a hot pick. They make $20 million for themselves, $200 million for Soros. And you say, wow, what a great guy. That guy's so smart. Then he gives you his next pick, and that pick is a disaster. Well, that guy has to worry about himself. He's gonna say, well, Mr. Soros, I made you 200 on this, I lost you 80 on that. You got to give me a big bonus. And Mr. Soros says, yes, overall you made me money. Thank you. That will go to the World Economic Forum and my mind control project. I'm kidding. But here's your bonus. Now you're sitting there saying, what bonus am I getting? I just followed this guy's pick and I got flatlined. And the answer is, well, you didn't get his other pick. You piled into his bad pick. And you're probably not even going to take another pick of his, even though his next pick might work. So it's pretty tricky. I mean, GALT's okay. You're dealing with a stock like that, there's a little bit of animal spirits in it, so you just got to be a little careful. Don't be surprised if you short it at $1.20 and it ends up at $1.60 or something like that. So same story as what I just told you, which was you got to accept the fact that when you press sell, whether it's sell short or sell long, that you may not have top ticked it. That's what you just got to accept, that you may not be, God's gift to trading, and you should prepare for the fact that pressing the sell button doesn't mean you should expect an instant drop. And if a stock has just gone up from 80 cents to $1.20, why would you say you pressing sell is the end and it can't go to $1.40 or $1.60? Of course it can. Audio high. I remember this one. I did the audio high pipe at like $1. It's done well. So let me think here on Ozempic. What's the synthesis route? E. coli or bacterial microbial? I think they have a special cell line for this. No, I'm still short Rigetti. It's a huge position. I barely remember Versartris. They had a growth hormone. I wasn't involved. I think a lot of guys lost money on it, but I wasn't there. QMCO is the non-quantum company that is up anyway. Yeah, I looked at stocks all day in prison. That's all I did. Stocks and reading. It was arguably awesome. Yeah, there's an opportunity there, Luca. You just have to be prepared for illiquidity. I mean, it was nice to be able to read and not be bothered by cell phones and all that stuff. Not great, not fun, but you got to make the most of it. Quantum's having a small bounce here, but market's behaving. Stuff like AVXL is down. GALT is up on an insider buy, so it kind of makes sense that it's up a little bit. This is a good time for these stocks to break, but Lau makes a good point in our Godel chat that it's hard to trust this price action. It really is. I think the meltdown of Bitcoin is something you'd like to see if you're a short.
Cancelled.
If you're a short.